Well, hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it's the day after the big crash. In fact, the surprise element in the poll verdict is something that the markets, were not prepared for, and that was evident with the kind of crash that we saw yesterday. Intraday fall of 2,000 points, but we did manage to recover 600 points from the day's low. So we ended 1,400 points lower. But the GIFT Nifty this morning is hinting at some bit of green on the screen, 0.5% higher for the GIFT Nifty as we speak. So we could expect some bit of normalcy or green to return on the screen today. Lots lined up over the next 30 minutes. We'll be talking to a host of experts to decode how to navigate this volatility after the election results, and of course we'll also be getting all your stock related queries answered on the show. So if you have any query, keep them coming in on our YouTube feed, live on our YouTube feed. We'll try and get them answered. Of course, if you look at the cues that are coming in this morning, just want to point out that foreign investors were sellers to the tune of 12,500 crore rupees or thereabouts, and they have increased their short positions in index futures as well. Domestic institutional investors were also sellers, in yesterday's market to the tune of 3,300 crore rupees. Of course, today is an important day given the fact that, we will try and see what direction the markets really take. But let me also bring on board our technical expert for today. Joining me is Rajesh Palviya of Axis Securities. Rajesh, great to have you on the show. The GIFT Nifty is hinting at some bit of, green on the screen, some bit of normalcy to return after the big crash that we saw yesterday. Mind you, it was the, biggest drop in 4 years on the indices. So here on today, what are the crucial levels you'll watch out for in terms of resistance levels on the Nifty?
Good morning, Nandita. So, there was a extensive supply pressure in previous day. Bank Nifty has almost tested a 200-day moving average, and Nifty slipped below 200-day moving average. So that's the dent on the near term as well as on the short term structure for the market. India VIX is at elevated level around 27 level. PCR is below 1. It's in oversold trajectory. Near-term indicators are turned into the oversold trajectory. So there is a high possibility that till this formation of government not certain, and who is going to take a lead as a prime minister. So I think that volatility is likely to be there in market for the next couple of days. But looking at the current scenario, we believe that some pullback action we can see on the higher side. 22,400 may act as a major supply zone. That's the critical level at this moment for the Nifty. If we are able to take out 22,400, then yes, there could be a short covering action in the market, and then we can see further more upside from those levels. So at this moment, 22,400 may act as a supply zone. On the downside, 21,700 may act as a support area for next 1 or 2 trading session. If we breaks 21,700, then there could be another round of supply pressure, and then possibly we can again retest the previous day low of 21,300. Even we can go further down also. So at this moment, keep your stop loss at 21,700 if you are buying here. We are initiating here bull call spread strategy. 21,900 call option you can buy. And you can sell 22,400 call option. By initiating this bull call spread, your cost would be around 135 rupees to initiate this bull call spread. Keep your stop loss at around 70 rupees and try to book profits when this spread gives you profit around 270 to 300 rupees. So we are expecting some pullback action in today's session. Maybe first half an hour would be volatile. But maybe in later part of the day, we could see some recovery in the market from here onwards.
Right. Let's also speak about the Nifty Bank Index. Ended below that 47,000 mark in yesterday's session. And let's not forget, SBI plummeted somewhere around 15% or thereabouts. How would you approach the PSU banking pack now? And what are the levels you'll be watching out for on the Nifty Bank Index in particular?
So for Bank Nifty, the major support zone is now placed at around 46,000. That's the challenging level at this moment, which is coincide with the 200-day moving average. So that needs to watch for next couple of trading session. If we able to hold out 46,000 level, then some recovery we could see in Bank Nifty also. But on the higher side, the major supply zone is placed at around 47,500 to 48,000 zone. So major short covering will trigger above 48,000 level only. So Bank Nifty needs to cross 48,000 level to initiate short covering action. That could give some comfort on the buying side, but still PSU banks may remain under pressure. Private banks are looking one notch better compared to the PSU bank, so one can focus on private bank compared to the PSU bank in this
Right.
market.
Right, Rajesh, markets have opened up, and of course, as the GIFT Nifty was hinting, there is some bit of green on the screen. In fact, the Nifty is back above that 22,000 mark. The sensex is up 500 points. Of course, these kind of gains, will be dwarfed if you see the kind of sell-off that we saw yesterday. But nevertheless, some bit of, some sense of relief as there is a bit of green on the screen. The mid-cap index is up nearly 1%. The Nifty Bank index also above that crucial 47,100 mark now. If you look at some of the other sectors, want to see what the Nifty PSU Bank index is doing really. That was the index that shed somewhere around 15% or thereabouts. In fact, the Nifty CPSE index was also down somewhere around 15%. But the Nifty PSU Bank index, that index also seeing some bit of green. In fact, all the sectors barring the BSE Capital Goods index is in the green. Yeah, the Nifty PSU Bank index is up somewhere around 1% or thereabouts. FMCG index, remember that was the sole index that was standing tall among the ruins, and yet, today itself it is up somewhere around 2% or thereabouts. Top sectoral gainers. Mind you, a lot of experts that we spoke to have said, perhaps this is the time to look at defensives. So both the Nifty FMCG and metal pack are, I beg your pardon, pharma pack are up in excess of 1%. Even the IT pack, is witnessing gains of somewhere around 1% or thereabouts. In terms of top gainers on the index at the current juncture, M&M is the top mover, followed by ONGC, BPCL. So some of these oil PSUs have managed to limp back. HUL, that was the top gainer yesterday, was up somewhere around 6% on a day when the Nifty was down 6%. Today as well, HUL is up somewhere around 4% or thereabouts. Tata Steel, UPL, Britannia, Coal India, HCL Tech, Dr. Reddy's are some of the other movers. Reliance Industries as well, up somewhere around 1.5%. Sun Pharma, Bajaj Finserv, Maruti, Bajaj Auto. So, all of these sectoral indices, Auto Pack, banking, PSU banks, all of them in the green. Let's also take a look at some of the losers. Hindalco, that's the top loser. Of course, the company has said that it will put its Novelis IPO on the back burner, given the citing market conditions. So that's the top Nifty loser. 4% down. Power Grid continues to see losses. Adani group of stocks under pressure once again. Adani Ports is among the top Nifty loser. At one point in time yesterday it was down somewhere around 20% or thereabouts. Today it's down 3.5%. L&T, NTPC, Apollo Hospital, ICICI Bank, Grasim, Axis Bank. So some of the private sector names also feature among the losers. I want to also see what the likes of PFC and REC are doing in today's session. REC is up somewhere around 0.5%. Remember, these stocks saw losses of somewhere around 25% in intraday's session yesterday. So limping back. PFC is another counter I want to see as to how it's performing right now. Up 0.3%. So mild muted gains coming in after the drubbing that we saw yesterday. Looking at the market open, Rajesh, which direction do you think some of these stocks like PFC, REC will take in today's session? Given the fact that the rebound or the mild rebound we are seeing is hardly anything in comparison to the kind of cuts that we saw yesterday.
So Nandita, I believe that some more pressure or some more sideways behavior we could see in most of the PSU stock for next couple of days, as market has already seen supply pressure in previous day, and that was the trend has already changed for the near term structure. So most of the PSU stocks have broke their important support area on the near term chart. So we believe that PFC, REC may face some supply pressure. For PFC, on the downside, the important support area is placed at around 405. That's the important level to watch for in the market. Though we have seen a gap up opening, but again, still there are a lot of supply pressure on the screen, and we believe that that likely to continue for another half an hour kind of trade. Once this supply pressure settle down at certain level, then I think some value buying may emerge in the market, and then we can see some pullback trades in all these PSU stock. But I think one should avoid for next one or two trading session in the PSU basket, especially because a lot of supply pressure is still lined up and still short build-ups are there in the system. So there is no short covering action is triggering in these stocks. For REC, again, the important support area is placed at around 415. That needs to watch. If these two levels are intact for this stock, so maybe in decline, you can try to add in staggered manner because long-term structure for REC and PFC is still intact, but the near-term structure has turned slightly bearish. So I think we can see some more supply pressure, wait for some more decline in this stock. REC and PFC may go down further. Uh, Review around 415 for REC and for PFC 405 is the important level.
All right, those are the important levels to watch out for. They could see some more bit of selling. And before I get in your thoughts on a Hindalco, I want to just point out the defense and shipbuilding companies are once again under pressure today, and severe pressure, so to say. Bharat Dynamics down another 10%, Cochin Shipyard 10%, GRSC down 9.5%. NBCC, Bharat Electronics, all of these defense infrastructure stocks are once again under pressure, and severe pressure at that. Even the Adani group of shares, as I was mentioning at the start, Adani Energy is down 11%, BHEL down, Hudco, all of these companies are under extreme pressure. We are getting some queries on our live feed from our viewers as well as to what one should do with defense stocks. In fact, Raj Simhan wants to know whether we should go short on defense and PSUs at the current juncture, or are there any slim chances of a rebound? How would you address that query?
So there is most of the defense stocks were in a bullish trajectory, but previous day we have seen a significant supply pressure, and now most of the stocks are now trading near to their 50-day moving average. That's the important for the near term trend of the stock. So for HAL, if we realize the stock 4100 is the important level to watch for. If it slips below to that level, then yes, if you are high risk tracker, then you can go short with stop loss of 4160. Your downside target below 4100 could be around 4000, even 3950. So wait for 4100 to break and then you can go short. For BL, again, the stock is struggling to hold out around 50-day moving average. So if it slips below to 240 level, 235, 240 level, then yes, possible supply pressure we can see in BL also. Then downside target we can see towards 220. That's the next level for the BL. So if it's sustained below to 240, you can go short. But again, these two trades, as he asked for the shorting, it's a high risk trade because both stocks on the near term structure are almost trading near to the important support area. Though there is a supply pressure in most of the defense sector, so there could be a supply pressure continue for some more time in this stock, as most of the stocks have rallied so much in last couple of months. So there could be some supply pressure or some profit taking is happening in this stock. So I think if you are a trader, then short with strict stop loss. If you are investor, I think these stocks are again giving you opportunity to buy in the decline, as long-term structures are still intact for the stock. Maybe in next couple of days, there could be high volatility in this stock. So wait for some volatility to settle down and then try to buy stocks if you are investor.
Right, that's the view coming in. I hope that answers your query, but want to come in and ask you your view on a Hindalco. Of course, there's negative news flow. The company has put its Novelis IPO on hold for now, citing market conditions. Down somewhere around 4% or thereabouts. How would you play the entire metal pack now after yesterday's fall, across the board fall? How are you approaching the metal pack, and particularly Hindalco after this news flow? How would you play it?
So most of the metal stocks have witnessed the supply pressure, and I think Hindalco has also corrected and now slipped below to 50-day moving average. And looking at the near-term structure, if stocks continues to trade below 620 level, then possible supply pressure can extend, and then it may go further down to 590, 580 zone. That's the next level on the downside for the Hindalco. On the higher side, the major resistance is placed at around 635. Until the stock not crosses those level, there could be supply pressure in the stock, and we may see further more down move for Hindalco. Even if you analyze the other metal stocks, Hind Copper has already broken all its short-term, medium-term support area. And looking at the structure for Hind Copper, now stock is trading below to 200, 300 mark. If it continues to remain below 300, then possible down move we can see towards 260. That's the next level for Hind Copper. So most of the metal stocks also under pressure in line with the market condition. I think that behavior is likely to continue until the Nifty not settle at a certain level. So I think metal is again avoid at this juncture. Maybe some more supply pressure we can see in the near term for most of the metal stock. But again, on the downside, we are focusing on Vedanta. That stock is looking attractive. So I think if you get opportunity to buy Vedanta around 385, 375 zone, that's the attractive level for Vedanta to buy around those level, as long term charts are indicating that breakout is still intact for the stock. So we will be focusing on Vedanta to buy in decline towards 385 to 375.
All right, Vedanta looking attractive from the metal pack. Hold that thought, Rajesh. We'll also come back and take up more viewer queries with you. But let me also bring on board our big market voice for today. Joining me is Harsha Upadhyaya, who's the CIO equity at Kotak Mutual Fund. Harsha, great to have you on the show. Thanks a lot for taking out time and joining in this morning. It was a surprise verdict, but a mandate of continuity. The markets were not prepared for something like this. But and of course, we saw a knee-jerk reaction yesterday. But here on, how do you think the markets will acclimatize itself to this reset? Do you see the possibility of a deeper fall from here, or do you think most of the selling related to election is done, and perhaps now markets will settle down and give opportunities to pick stocks?
Good morning. As you said, I think clearly market was negatively surprised yesterday because the outcome that came was very, very different than what we had seen in 2014 and 19, where a single party had majority. And also it was very, very different than the exit polls a couple of days earlier. So to that extent, I think the nervousness was clearly visible and there was a knee-jerk reaction. As we look ahead, clearly, as we have been saying in the past as well, the small caps and the mid cap valuations are on the higher side. So to that extent, volatility could be expected at any point of time. This has just become another trigger. So one needs to be a little cautious on the broader end of the market. And also all eyes will be on government formation and the announcements related to cabinet. And thereafter, in the next few weeks, we are going to have a full year budget. So I think all eyes will be on these events going forward. And thereafter, probably you will have a clear sense of direction in terms of the market. Until then, probably it's going to be volatile in our view. However, if you are a long-term investor, investing into large caps at this point of time is not a bad idea. Valuations have come back to historical averages. However, if you are looking at lump sum investments in mid and small caps, probably that's not a great idea. It should be staggered, or you should have a portfolio with large cap tilt.
Right. You mentioned that small and mid cap valuations are out of whack right now. But what about? Do you think more correction on the Nifty is required for valuations to come back to comfortable levels?
It's almost at the historical averages. When I say historical averages, averages of the last 15 years. There is no reason to believe that it will stop only at historical averages and can't go down. That cannot be the assumption. However, if you are investing now for a medium to long term, I think the chances of losing money, especially given that our economy continues to grow at very healthy level, corporate fundamentals are very strong, oil prices have remained benign. So overall macro environment remains very, very supportive for a reasonable degree of strength in earnings growth. If that is true, then I think for a medium to long-term investor, even investing in lump sum in large caps may not be a bad idea. However, the same cannot be said about the mid and small caps because they are still at a premium of anywhere between 25 to 35% to their historical averages.
Right. So within the large cap universe, where would you look for opportunities now? Would you say that the underperformers like FMCG, pharma, even private banks for that matter warrant a look now? And is this a time to move out of overheated sectors like most of the PSU sectors, so to say, given the kind of sell-off or damage we saw yesterday? Is the time to move out of these overheated sectors?
First of all, when we analyze businesses, we don't categorize them based on ownership. We look at the underlying businesses, the fundamentals for those businesses, how are they moving, how are they likely to move, what are the valuations, etc. So to that extent, we don't make a differentiation between private or PSU just based on the ownership. That's point number one. Secondly, if you look at the large cap universe, clearly there is one pocket which is probably lower than pre-COVID levels in terms of valuations. That's the private sector large banks. I think that's where a little bit of safety is there. Apart from that, the usual defensives such as pharma, FMCG could also be the sectors to make your portfolio a lot more resilient in times of volatility. However, if you believe that the overall growth roadmap or the policy roadmap is going to continue irrespective of the coalition dynamics, then I think some of the stocks that have corrected over the last trading session can also come back. However, in the meantime, until we find such evidence, probably there will be nervousness given that this pocket is rich in terms of valuation.
And what's the call on IT now? Because this pocket has also been an underperformer and earnings recovery is yet to kick in. A couple of more quarters, I guess that's what the markets are saying. But still no clarity on when the rate cut trajectory in the US will start. So what is the kind of call you would take on the IT space now?
Yes, clearly IT continues to remain sluggish. The global growth is still a question mark. The interest rate trajectory in the developed markets is also coming under question now. There was an expectation that in 2024 you're going to see a couple of cuts, but as we speak, probably that is getting pushed out every day. So to that extent, there are no near-term triggers for IT. If you look at FMCG, on the other hand, probably is something where there could be some green shoots expected if there is a reasonable monsoon this year, and that's the base assumption at this point of time. And also, this pocket has not seen incremental money flowing in over the last couple of years. So to that extent, if you are really looking for safety, I think large cap private banks and FMCG and maybe pharma on a stock specific basis. I think these are the three pockets to look at.
Harsha, I want to come back to PSUs once again. I know you said that you don't look at ownership while looking at the business internals and investment ideas. But would you fear a derating for most of these PSU stocks, or would you say that the kind of correction that we've seen yesterday actually offers a good entry point in some of them, if not all, given the fact that the broader direction of the economy may not change here on?
As in every bull market, whenever a market does well, you will also have speculation coming in, and a lot of stocks without support of fundamentals would probably go up. That's what exactly has happened during the last 4 years since the COVID lows. There are a lot of stocks which are illiquid, which have very less float, where the fundamentals are not so strong, but still they have participated in the rally. In some cases, probably they have gone up much higher than the fundamentally strong companies. I think that's where, irrespective of the ownership, there is going to be a question mark. As it is, they were likely to see some sort of nervousness at higher valuations. And with this event, probably that will get accelerated even.
Harsha, last question really. Which are the pockets, that are evergreen themes which will be in vogue despite the election or irrespective of what has happened, politically? Which sectors would you identify as evergreen themes that, one could turn to in volatile times?
We still believe auto components will be one sector where earnings growth will continue to be higher than that of the average market earnings growth. And also, most of the policy decisions may not directly impact auto components, at least in the short term. So to that extent, I think within the domestic cyclical basket, probably auto components will be something which is probably more resilient. And also in terms of earnings growth, as I mentioned, the trajectory seems stronger than the average earnings growth that we are expecting. So probably this is one space where you can continue to have your overweight exposure.
Right, Harsha. I mean, very last question. I know I said that that was my last question, but a lot of people are saying that we need to wait it out for a couple of more sessions to see which direction the markets will take. But even then, I want to push my luck and ask you, where do you see the Nifty by the end of this year? Do you think we are still poised for positive returns this year, given the kind of surprise that the election verdict has thrown up?
See, as I said, after yesterday's correction, probably we are very close to historical averages in terms of valuations. Now we don't know what the valuations will be 1 year down the line, but assuming that it's going to be around the historical valuation range, then market should trend in line with the earnings growth. And we do expect earnings growth to be healthy over the next couple of years. Next 2 years, we are expecting earnings growth for Nifty to be in the region of 14 to 16%. If there is no valuation derating and market moves in line with earnings growth, then that is the kind of returns that one can expect. But it all depends on the exit valuations whenever any investor would like to exit.
All right, that's the call then. But with that, Harsha, thanks a lot for taking out time and joining in and sharing your thoughts with us. Always appreciate chatting with you. Well, with that, let's go back to Rajesh, who's been waiting by very patiently. Rajesh, want to get in your thoughts on the entire FMCG lot. Yesterday, as I mentioned, that was the lone, survivor. But looking at HUL today in particular, your thoughts? That's the top Nifty gainer, 5.5% up today as well. So in the matter of 2 sessions, this stock is up somewhere around 12%.
A very strong buying action as market has shown, buying interest in the defensive sector. So FMCG is the first pocket where everybody is trying their buying interest over there. So HUL, yes, we do believe that further upside we can see during the day itself, and 2700 is the immediate target where we are focusing. Though stock has already moved up post opening. So I think if you get any chance to buy around 2600, 2580, that's the important level again for intraday traders. Upside target we are projecting towards 2700. That's the previous swing high of January 2024. So I think where stock may attract some supply pressure. But again, whole FMCG basket is looking very attractive. Even you can focus on United Split. That stock has also broken out, and in this kind of market, stock is enjoying now at all-time high trajectory. So we believe that this basket one needs to watch, and they can take some long bets in FMCG stocks like United Sprit, HUL, Marico, even V-Mart. These all stocks are even Avenue Supermart. These all stocks are looking very promising. So I think our focus is on the trading side is more towards the FMCG basket, and we are initiating a buy for all these stocks with appropriate stop losses.
All right, that's the view then on some of these FMCG names. But just want to point out, gains have fizzled out when it comes to the mid-cap pack. That's in fact, even the Nifty Bank Index has given up all of its gains. The Nifty PSU Bank Index is once again down 2.5% or thereabouts. So selling pressure continues. And if you look at the energy pack as well, Rajesh, there is comfort emerging when it comes to crude prices, right? Brent below that $78 per barrel mark as well. But sell-off continues when it comes to these PSU OMCs as well, right? HPCL, BPCL once again down 2 to 3%. Where do you see a floor when it comes to some of these stocks?
So I think OMC may remain under pressure as most of the OMC stocks like HPCL, BPCL, IOC, both all three stocks have broken their important support area on the near-term structure. For HPCL, again, stock has now slipped below to its important support area of 500 level. So till stock remains below 500, then there is a high possibility that furthermore follow-up selling we can see in HPCL. There was short built up in the previous day. I think this stock can correct further towards 465 to 460. That's the lower level for Hind Petro. If we analyze on the BPCL, again stock slipped below to 150-day moving average. And looking at the near-term structure, stock has broken down its almost last 10 weeks consolidation range. So looking at this breakdown, we believe that if it continues to trade below 585 mark, then possibly down move can extend towards 540, even 530 zone for BPCL. So I think this oil marketing company may attract further more supply pressure for next couple of trading sessions. So I think those who wants to buy can wait for another correction and then look to buy in the decline.
Okay, wait for more correction and buy on decline. Just want to point out the India VIX has cooled off significantly. Yesterday, remember, at one point in time, the India VIX was up 40%. Today, it has cooled off by 20% almost, but there is quite a lot of volatility. Nevertheless, on the street, Nifty has given up almost all of its gains now, just about up by 30 points or thereabouts. So mid caps have once again sunk back into the red, and so have indices like the Nifty Bank Index, Realty Index, Energy Pack. All of these indices in the red have given up most of the early gains. But looking at the Adani group of stocks, sell-off continues there. How would you ride out this weakness?
So I think the straight recommendation would be avoid at this moment, because already corrected most of the Adani group stock. Again, volatility is likely to be there. It's very difficult to keep stop loss for these kind of volatility in this stock. So I think for next couple of days one should avoid Adani group of stocks as high volatility is there. Still shorts are there in the system. Maybe we could see another round of supply pressure for next couple of days. So I think from our side, we are avoiding here Adani group stock. But yes, those who wants to invest, yes, they can look to buy Adani port in the decline. If you get opportunity around 11.50, even 11.20 kind of zone, that's the attractive level for Adani port again to re-enter for near term to short term investment. So Adani port is on our radar to buy in the decline, but not at current level. We will wait for another 4 to 5% correction. Then we will try to review the stock structure, and then we can deploy some long position around those levels.
Two stocks I want to bring your attention to: L&T and HCL Tech. CLSA has made some adjustments to its portfolio. They have replaced L&T with HCL Tech. L&T top Nifty loser at the current juncture, 4% down, and HCL Tech, of course, opposite moves there, 2.5% higher. How are you viewing these two shares on the charts?
So I think L&T is now approaching towards its important support area, which is placed at around 3200, 3180. That's the important level on the downside. So I think another 2-3% correction could again attract some buying interest, as the long-term structure for L&T is on the bullish side. Though there is some supply pressure adjustment is taking place. So I think in decline you can again buy in a staggered manner towards 3200, 3180 kind of zone. But yes, clear uptick in HCL Tech, though overall long-term structure for most of the IT stocks are still under consolidation or on the bearish side. But for HCL Tech, if this pullback sustain above 1320 level, then possible follow buying action we can see in HCL Tech, and possible up move can be there towards 1365 to 1380 kind of zone. So if you are already long in the HCL Tech, can keep stop loss at 1320 to hold your long position.
All right. And Rajesh, in terms of recommendations, looking at the market texture today, what would you advise our viewers to buy or sell buy for a time horizon of say 1 to 2 weeks?
So short is very difficult in this kind of market, as structure is oversold for near-term structure. So some of the buy ideas where which are considered as a defensive sector. First one is FMCG. So we have already discussed the stock HUL, and now again still we can see HUL is trading at a day high level. Another stock that we like from pharma space, that is Lupin. After a significant corrective move, again Lupin is showing some bit of recovery from lower level. So we believe that if Lupin continues to hold above 1580, then possible upside we can see towards 1650 to 1660. So that stock is looking attractive. Colgate Palmolive is also looking attractive from that basket, and we believe that this stock can continue for the more upside, as stock has already broken out its previous multiple supply zone. So there is a breakout on daily as well as on the weekly chart. So buy Colgate Palmolive also with stop loss of 2900. Upside target we can see towards 3000 to 3020. So that stock is also looking attractive. Even one can look to buy this United Sprit McDowell. That stock is also looking promising. So I think whole FMCG basket is on the buying side. So McDowell is buy with stop loss of 1250. Upside target is 1320.
All right, the whole host of recommendations coming in from Rajesh. With that, Rajesh, thanks a lot for taking out time and sharing your thoughts with us and helping our viewers also navigate this bout of volatility. Look forward to interacting with you sometime soon. Well, with that, we've come to the end of this edition of Opening Bell. Look at the markets, extremely volatile. It was up somewhere around 90 points when I last checked, and now it's up just about 60 points. So, in a matter of minutes, we are seeing 30 to 40 point kind of movement on the Nifty. Bank Nifty has slipped into the red, and so has the Nifty PSU Bank Index. Mid caps are also in the red. What's holding out firmly is the entire FMCG basket. The Nifty FMCG index itself is up somewhere around 4%, with the likes of HUL, and Britannia, Tata Consumer emerging as the top gainers, with gains of somewhere around 4 to 6% apiece. Well, that sums up our show today. Thanks a lot for tuning in, but of course stay tuned to Money Control for all your other news and updates throughout the day.